Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth right here in Singapore. The investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers. We just crossed the 1 million mark for number of reads and 58,000 likes. I've produced over 900 videos with more than 500,000 watch hours as of June 2025. I also focus on regional and global economic trends. Today, we're doing a crucial deep dive into DBS Bank's Q1 2025 financial report. Stick around to see what it really means for your portfolio. We'll be breaking down every key slide from their CFO presentation. We'll examine their record income performance, the impact of global tax changes, and what their wealth management surge means for Singapore investors like you and me. All right, let's jump right into slide 1, the opening highlights. DBS delivered record quarterly income of $591 billion, up 6% year over year. But here's the twist. Their net profit actually dropped 2% to $290 billion. Why? The global minimum tax hit them hard. Think of it like getting a pay raise, but then finding out your tax bracket changed. The underlying business is strong, but external factors are eating into the bottom line. What's fascinating is their return on equity stayed solid at 17.3%. For Singapore investors, this tells us the bank is still generating strong returns on shareholder money despite tax headwinds. Moving to slide 2, the year-over-year breakdown. This is where things get interesting. While net profit declined, fee income exploded by 22% and treasury customer sales jumped 11%. It's like a hawker stall that sells fewer plates of chicken rice but makes up for it by selling way more drinks and desserts. Revenue diversification is key here. The prudent general provision build of $205 million caught my attention. DBS is essentially putting money aside for potential future loan losses. It's like keeping extra cash in your emergency fund when you see storm clouds gathering. Smart move by management. Now slide 3, quarter-over-quarter performance. Here's where momentum really shows. Net profit rose 10% from Q4 2024, and markets trading income more than doubled. This suggests DBS entered 2025 with strong tailwinds. When you see both revenue growing and expenses falling, that's operating leverage in action. For those investing through CPF or SRS, this quarterly improvement matters because it shows the bank isn't just riding the interest rate wave, they're actively growing their business. Let's examine slide 4, net interest income trends. Their net interest margin dropped 3 basis points to 2.68%, but loans grew 2% quarter over quarter. It's like earning slightly less per dollar lent, but lending out way more dollars. The math still works in their favor. This balance sheet growth shows healthy customer demand. Singapore's economy is humming, and businesses need capital to expand. DBS is right there, providing it. Slide 5, loan portfolio dynamics. Non-trade corporate loans jumped 3% while consumer loans stayed stable. This tells us Singapore businesses are confident enough to borrow and expand. That's a good economic signal for all of us. The deposit growth of 3% to $576 billion is equally important. People and companies are still choosing to park their money with DBS. That trust translates to lower funding costs. Moving to slide 6, the fee income explosion. This slide deserves extra attention. Fee income hit a record $150 billion, with wealth management leading the charge at $724 million. That's 39% growth quarter over quarter. Why does this matter for Singapore investors? Because Singapore is becoming Asia's wealth management hub. Rich families from China, India, and Southeast Asia are moving money here. DBS handles more than a third of Singapore's family offices. They're not just riding this wave, they're creating it. For even more granular data, detailed financial models, and a full written breakdown of this DBS report, including an extended valuation analysis, make sure to check out our Substack. The link is right there in the description. Slide 7, wealth management powerhouse. Assets under management reached $432 billion, and they're targeting $500 billion by 2026. Think about it. That's nearly half a trillion Singapore dollars under their care. The fees from managing this wealth provide steady, predictable income regardless of interest rate cycles. Slide 8, cost management discipline. Their cost-income ratio stayed at 37%, which is excellent for a major bank. They're growing revenue without letting expenses run wild. It's like a successful coffee shop that serves more customers without hiring unnecessary staff. Now for asset quality, slides 9 and 10. NPL ratio held steady at 1.1% and specific allowances were just 10 basis points. Translation: very few customers are defaulting on loans, and the bank isn't worried about credit losses. This is crucial during uncertain economic times. Slide 11. Capital strength. Their common equity tier 1 ratio of 17.4% is well above regulatory requirements. Think of this as their financial cushion. They have plenty of buffer to handle economic storms while continuing to pay dividends. Speaking of dividends, slide 12 shows they declared 75 cents per share total dividend, up 39% year over year. That's 60 cents ordinary dividend plus 15 cents capital return dividend. For income-focused Singapore investors, this shows management's confidence in sustained profitability. The final summary slide reinforces the key themes. Broad-based business growth led by wealth management, ROE above 17%, despite tax headwinds, and strengthened reserves for future uncertainties. So what's my overall assessment? Based on this report, DBS remains a solid buy for Singaporean investors, especially those focused on dividend income and long-term wealth building. Here's my rationale. First, their diversified revenue streams provide resilience. While net interest margins face pressure, fee income from wealth management is booming. Singapore's role as a regional financial hub isn't going anywhere. It's only getting stronger. Second, their conservative risk management approach gives me confidence. That proactive provision building shows they're thinking ahead, not just chasing short-term profits. Third, the dividend sustainability looks solid. Even with tax headwinds, they increased the dividend by 39%. Their strong capital ratios support continued shareholder returns. However, there are risks to consider. The global minimum tax will continue pressuring earnings in 2025. Management expects full-year net profit below 2024 levels purely due to tax effects. Also, if interest rates fall faster than expected, net interest income could face more pressure. For CPF investors, DBS offers attractive exposure to Singapore's growing financial sector with steady dividend income. The current yield of around 5.4% is competitive, especially considering the potential for capital appreciation as Singapore's wealth management sector expands. Given these results, this is how I would consider positioning DBS in a long-term Singapore portfolio. As a core holding representing 3-5% of your total portfolio, paired with other Singapore blue chips for diversification. So, we've dissected DBS Bank's Q1 2025 report, and I've given you my personal take on what it means for your investments. If you found this video helpful and want to seriously level up your investing game, please give it a like, share it with your friends, and subscribe to the Investing Iguana channel so you don't miss our next insights. And for those who want to be truly ahead, our premium members gain exclusive early access to all our videos, often a full week before anyone else sees them. This means you get Iggy's detailed analyses and urgent insights on major market moves directly to your inbox, giving you a significant head start. It's just $1 a month, less than a cup of coffee. Think of it as your consistent daily dose of financial fuel for smarter decisions, delivered before the masses. Ready to join the inner circle and get that early edge? Just click the link in the description below to become a premium member today.